Hi, this is Shawn Watkins with Investors Workshops. What I wanted to do today was just give you a quick representation of the pros and cons and the differences if you were going to invest your cash in the gold market versus buying real estate subject to. So what I've done is I've gone ahead and I've made some illustrations on the board. For this illustration, we're going to use $40,000. So if you've got $40,000 to invest, on the left side you're going to buy gold, and on the right side you're going to buy two income-producing properties. So over here, today's price of gold is $1,500 an ounce. So if you had $40,000 and you were going to go buy gold, you would be able to buy 26.6 ounces of gold, which would be a $40,000 investment. Now you own the gold. On the right side, we're going to take that same $40,000, we're going to buy two income-producing properties. They'll be $100,000 each. You'll put $20,000 in each property as upfront money. You'll have an $80,000 debt service on both. And what I've done here is, just for the ease of math, is to show that, let's say for instance that each property produces $250 per month net cash flow. You'll be getting $500 per month or $6,000 a year income. When we translate that over here onto the gold side, you're not getting any monthly income whatsoever. You also don't have any monthly expense because you've already spent all the money to acquire it. So on the left side, after 1 year, what have you got? If the price of gold hasn't changed whatsoever, you still have 26.6 ounces of gold, you haven't made any money, you haven't lost any money. On the right side over here, same thing applies. Let's say the real estate market hasn't done anything, hasn't gone up, hasn't gone down. You'll still own $200,000 worth of real estate for the same $40,000 investment. Year one, you've got your $6,000 of income. Year two, everything stays the same, you'd have another $6,000 of income. But let's say that by year two, gold has jumped by $500 an ounce. So now you're going to sell that gold for $2,000 an ounce. That's going to get $53,200 selling all the gold you have, or a gain of $13,200. It's over 30% return over 2 years. Not too bad. Here's the problem that I can see with buying in the gold market. If this worked out good for you and you're happy with $13,200 in profit, now you get to pay capital gains because you've actually had to sell the gold to get the gain. And what happens, we know that when we sell and we make a profit, the government taxes it. So let's just be, generous here and say they only take 50%. So now you've got $6,200, $6,300. That's all you've got left is profit. So if you started with 40, okay, and now they took half your profit, you add $6,300 to it, you've got $46,300. Still not bad. You did make money, right? What if you want to get back into the gold market? How much is gold now? Well, gold is $2,000 an ounce. How much is it going to cost you to buy the same amount of gold? If you want to buy just another 26.6 ounces of gold, you're going to need what? Shockingly, $53,200. So what you'll need to do is take all the gain that you made and add another $6,300 into it. Hopefully you can do it again. On the right side here, when we're talking about real estate, you have been making money every year through cash flow. Now, you haven't sold the asset, so you're not subject to capital gains. You have depreciation, you have expenses to offset it, and here's the thing. Every month that you're spending, you're servicing the debt, you're amortizing the debt. So over here you're controlling $200,000 worth of assets for the same $40,000. You're getting monthly income, you're getting tax benefits, and by the way, you don't have to sell it to realize any of that gain. That gain will just keep coming in over and over and over again. So you could actually change this from gold to flipping real estate. Because I believe that when you buy gold, you're speculating that the price will go up. When you buy real estate to flip it, it's the same thing. I've done a lot of flipping. I've bought a lot of houses to flip. But the goal here is that if you want to know you're going to make money, don't wonder what the price of gold or real estate is going to do. Know what it's going to do. Control the real estate. Go after the monthly cash flow and the tax benefits. And by the way, one day these things will be zero debt. And if you'd like to have, how about $1,000 a month times 2 for these houses, $2,000 a month net cash flow coming in for something you did 15, 20 years ago, That's why my vote is in real estate, not something like gold, and at this point, not something like flipping. Thanks.